This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today, searches are exploding as Wednesday delivers the rally investors have been waiting for. Nvidia reported earnings after Tuesday's close that shattered expectations, sending the stock up over 8 in pre-market and early trading. The S&P 500 is surging 1.4 toward the 7,000 milestone. The Nasdaq is jumping 2.1, and the Dow is gaining 0.9. After weeks of AI spending skepticism that crushed software stocks and sparked defensive rotation, Nvidia just proved the doubters wrong in spectacular fashion. The rally is broad-based, with semiconductors, software, and cloud computing stocks all participating. This is what market leadership looks like. Nvidia delivered a masterclass earnings report. The company reported 78% revenue growth for fiscal Q4, crushing Wall Street's already aggressive estimates. Revenue came in at $39.3 billion versus expectations of $37.9 billion, and earnings per share beat by a wide margin. But the real story is the guidance. Management projects continued explosive growth through fiscal 2027, with CEO Jensen Huang stating that demand for the new Blackwell AI platform is insatiable, and that data center customers including Microsoft, Amazon, Meta, and Google are all accelerating their infrastructure build-outs. Nvidia also announced its expanding production capacity to meet demand that exceeds current supply. The report validates everything bulls have been arguing. AI infrastructure spending isn't slowing down, it's accelerating, and Nvidia remains the dominant supplier with no credible competition in sight. Here's what's actually happening. The market just got confirmation that its concentration bet on AI leadership was correct. For weeks, investors worried that massive tech spending on AI infrastructure might not generate returns, that software companies would get disrupted by AI automation, and that the rally was built on hype rather than fundamentals. Nvidia's results and guidance just demolished those concerns. The 78% revenue growth proves demand is real and growing. Jensen Huang's commentary about multi-year visibility on orders and capacity expansion confirms this isn't a short-term cycle. The hyperscale cloud providers are committed to building out AI infrastructure because their customers are demanding AI capabilities. This creates a virtuous cycle. More infrastructure enables more AI applications, which drives more demand for infrastructure. Software stocks that sold off 20 to 30 are rebounding because Nvidia's success means the AI ecosystem is healthy and expanding. If your 401k or retirement accounts have tech exposure through index funds or individual stocks, Wednesday is delivering significant gains to your portfolio. Nvidia's surge is pulling up all semiconductor names. AMD, Broadcom, Marvell, Micron are all rallying sharply. Software stocks that were crushed during the recent sell-off are rebounding as investors realize AI creates more opportunities than threats for well-positioned companies. Cloud computing stocks like Microsoft, Amazon, and Google are gaining because Nvidia's results confirm their AI infrastructure investments are paying off. The S&P 500 pushing towards 7,000 means your broad market index funds are hitting new all-time highs. For anyone who stayed invested through the volatility or bought during the pullback, today validates that patience. For consumers, Nvidia's success confirms AI is transforming how businesses operate, which means more automation in everything from customer service to supply chain management to content creation. The immediate question is whether this rally has staying power or if profit-taking emerges after the initial surge. Watch the S&P 500's behavior around 7,000. That's a major psychological level that could trigger some selling. Also watch whether defensive stocks that led during the recent rotation start giving back gains as money rotates back into growth. Other tech earnings this week will be important. Any company that reports weak results or cautious guidance will stand out sharply against Nvidia's strength. Also monitor any Federal Reserve commentary about inflation and rate cuts. Strong economic data from tech could keep rates higher for longer, which would pressure valuations. And watch for any tariff announcements from the White House, which could still disrupt the rally. But for now, the market has the catalyst it needed to push higher. Nvidia just validated the entire AI investment thesis. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.